have helped diversify.
Prices rebounding. We just learned today that prices rose 3% in September from a year ago. That's according to the Case-Shiller Home Price Index out today.
But there is a wrench that could be heading toward the housing market's momentum. The once sacred mortgage interest deduction, which of course many homeowners count on when calculating whether to buy, that could be on the chopping block as part of any deal to avert going over the fiscal cliff in order to raise revenue for the federal government. What happens to the housing market if that goes by the wayside or if it's modified in some way? Joining us is Tanya Marchiol, the president of Team Investments. Fred Glick, the president of U.S. Loans Mortgage and a licensed realtor and mortgage broker, will join us in a moment on this very important issue. Tanya, what do you think would happen? I mean, you deal with clients across a range of income levels. Eliminating or reducing mortgage interest deduction, what effect would that have on home ownership in this country, do you think?
Eliminating the mortgage deduction will absolutely not increase revenue. What it will do is it will cut consumer spending. Homeowners upgrade their homes, they paint, they make their yards better, they have the pride of home ownership. And when you don't have that and you can't calculate in that mortgage deduction, it's going to hurt our economy overall.
The question was, what's it going to do to the housing market?
It's absolutely going to hurt the housing market because people won't buy. So the problem is all those things, and we're not going to be putting capital back into the economy.
But Tanya, don't you think we already push home ownership in so many ways in this country? We are unique in all the world with a 30-year mortgage. We are unique in all the world with non-recourse loans, meaning I can have $1 million in the bank, but I can mail in the keys to the bank and say, I don't want to pay it anymore, and they can't do anything.
Not.
We push home ownership in a way that doesn't exist anywhere else in the world. You really think home ownership levels would fall? I don't believe it.
We are becoming a renter nation. It just came out that first-time home buyers that used to make up 40% of our buyers is now down to 31%. Buyers are still scared. You take away this tax deduction and it creates more fear and less money in the economy.
You know, it might have an impact on the margins, but let's not forget that once upon a time we could deduct the interest on credit card debt. And they took that away. And
we still spend like crazy on credit cards.
Last I checked, we still use credit cards out there. So while on the margins it might...
You have to remember that a $3,000 credit card bill or a $10,000 credit card bill is very different than a $100,000 or $300,000 or $1 million home.
Yeah, but people look at their mortgage on a monthly basis. Can they afford the monthly payment? That's what it comes down to. They don't look at the total amount of the mortgage itself. Can I afford that monthly payment right now?
They calculate the deductions into the purchase price of their home. Any good agent is actually going to analyze the home and tell someone whether they can afford it or not. The other thing that we're missing,
we're playing devil's advocate here, but I think we really are onto something here. If you can't afford the house without the mortgage deduction, then the question is, do you have any business buying that house then?
Right, so now you're creating more of a renter nation like we're becoming. And let's talk about landlords for a minute. Landlords, when you're analyzing a property, absolutely take mortgage deduction into their overall cap rate, everything else.
You keep saying a renter nation. Tell me, what have the numbers done for home ownership? We've gone from what percentage of people owning homes in America to what percentage? Do you tell me? What is it? How much is it falling?
First of all, let me make my point about landlords. Those numbers are actually going to go up for renters, which is going to hurt the middle class. So again, we're hurting the middle class. Going to your point right now, the National Association of Realtors president just came out and said that the home buying process has actually taken us out of the last 5 of the 7
the fact is, Tanya, that home ownership overall it peaked dramatically during the boom, went to people who probably shouldn't own homes. It's fallen back to a far more normal level. And you keep saying a renter nation. You know what?
And now
renting isn't so bad. Hold on. Renting. You know what? Sometimes you don't want to encourage buying. You know what renting is about? It's about flexibility. If you lose your job, it's much easier to go to a smaller place that you can afford. Pushing home ownership for the sake of home ownership is not necessarily a good thing. Haven't we learned that?
Homeowners take fantastic care of their homes. They put money back into this economy.
Not when they put zero down, Tanya.
They do.
Not when they have zero equity in it and they don't care.
We don't have zero down mortgages anymore, so we don't have to worry about that any longer.
I'm done. Tanya, you're a good sport. Thank you for joining us today. We'll wait to see. You know, the talk is that maybe they're going to cap the mortgage deduction.
Right.
Out there maybe to $2 million.
It's ultimately a subsidy for the rich, right? The more home you buy and the more home you can afford to buy, the more deduction you get.
I would miss it, certainly.
I think everybody would miss it.
Of course we would.
But it's another example of using the tax code to nanny state our way into what we think is right and wrong.
Yep.
And when you push people into home ownership when they shouldn't own homes,